As we're seeing, there is enormous caution about, as I said earlier, the hypothesis that we're all living. We're trying to understand what's happening with the virus itself, what the implications are, what the life cycle is, and how we move forward. As a result, forecasting the future has become critical. It is an essential part of how we actually plan for the readiness around when our borders and our doors open again. We are, as a result, delighted to now welcome to the stage Hala Matar Choufany, who is a very familiar, beautiful face of our industry and one that is trusted enormously for the intelligence that she brings in terms of understanding what is happening in the world. She's the president of HVS Middle East, Africa, South Asia, and Dubai. And she's, again, as I said, providing the world with intelligence through HVS around what is happening, whether it comes to market valuations, investment, development, marketing itself, whatever the case may be. So I'm sure she's extremely busy at the moment in terms of trying to help people understand what in the world is going on and how do we ready for our next normal in the new world. So I will say no more aside from Hala, thank you so much for joining us. We are thrilled you were with us, and thank you for giving your intelligence and who you are to the Hospitality Tomorrow 2 stage. Enjoy.
Thank you, Anita. I mean, you project so much positive energy. That's very much needed these days, and I'm delighted to be on with you. So good morning and good evening to everyone, and thank you, Jonathan and the team, for really pulling us together at these very critical times, though virtually. I'm just hoping everyone can hear me. And just before diving into the hotel and traveler guest sentiment findings and the learnings we have done, and as you said, Anita, rightly, forecasting is extremely critical. And, I have a confession to make. I did feel very nervous last week when I actually sat down, reviewed the findings, have been observing what's happening, looked through all the announcements and the changes that are likely to impact the industry. And I continue to be nervous because since last week, additional announcements only means that there is hope, definitely, and we continue to hope. And I'm an optimist by nature, hence why I'm not necessarily happy that, there's so much nervousness and uncertainty out there. But at the end of the day, we also have to play a role and provide realistic advice for owners and operators and potential investors in determining how long this is likely to take, what's the outcome, and whether they will be able to sustain. So with that, I'm just gonna share my screen, and perhaps we can start this conversation by actually sharing some of the findings of the traveler sentiment and the learnings we have made there. So again, in a traditional year, and we will look at 2019 and the forecast we have there, I mean, a lot of our learnings is about obviously observing trends in the market, segmentation, seasonality, and being able, despite having experience in recessions and downturns, being able to predict to some extent the duration as well as the potential outcome. Specifically in these very unchallenging and troubling times, it has become even more difficult to determine the duration and also the outcome. So we have run this survey across 350 frequent travelers. A copy of the detailed survey is available on LinkedIn and HVS website. And I have selected for the purpose of this conversation some of the key questions that we have asked, and also what are the learnings. And the respondents, when asked about the purpose of travel, 39% have selected family gatherings and reunions. And that's quite not surprising, but interesting, because what does that mean in terms of hotel stay? Would that translate into hotel rooms? Are they going to go back home, and whether they will be going back home permanently or just visiting? 29% will go on holidays. And when we look at those that have actually said they will travel, the vast majority basically said that they will wait on at least 1 month, and many others after 3 months to travel. And this is probably when we will start seeing some holiday-related travel taking place. Most importantly, the 31% that relates to the business market, and we've heard again in China this morning and elsewhere, it really ties into the seasonality and the dependency of the hotel on the business market. But although 31% of the respondents have actually said they will travel for business, we really need to understand what are the implications on the regional travel as well as international travel, and perhaps even more importantly, what would be the corporate policy for business travel. At the moment, it does seem as well that in addition to the travel bans that are in place, many corporations out there, they also have a travel ban up to at least September, and potentially some of them end of the year or early into 2021. Moving on to the decision-making when selecting a destination, 85% of the travelers have responded prioritizing travel arrangements based on the government management of the COVID-19 pandemic, in addition to safety and security. This is interesting, but equally this is very demanding in the sense that it further highlights how dependent and how complex the situation is, and whether those operators and brands and owners, they are able to deliver on their promise. The perception at the moment is more importantly the safety at the destination rather than the hotel itself. And this is not to discount all the efforts that are being made by operators or at the individual level, but it's more importantly is how these governments have reacted during the outbreak. When looking at potentially when will respondents stay at hotels, 70% of the respondents said that they will book and stay after 1 month of the pandemic containment or decline. We definitely in the GCC specifically, we are seeing the numbers. They are continuing to be, definitely there is more containment, but the numbers are not necessarily declining as yet, which also suggests that potentially it will be 3 to 6 months before there will be guests staying in hotels. The type of accommodation suggests that with the current guest confidence that is quite low at the moment and the perception of risk, that the internationally branded hotels would be favored amongst the travelers. And that's interesting because when we look at how Airbnb in the last couple of years, at least in the last 18 months, have posed serious competition to the branded hotels, with this crisis, safety and security is going to be key, and the operators have also the responsibility to deliver on the brand promises that they are making out there to meet the changes in the consumer mindset and guest preferences. And finally, the challenges of hotel reopenings, and we have been discussing this at length, and different owners and operators have to look at the challenges as it relates to their situation. But there's no doubt that the guest confidence and the new and health safety regulations, these will pose the greatest challenges for hotels reopenings, but also for hotels deciding on whether they should continue to remain open. Since we did this survey 3 weeks ago, there are many more hotels that have made the decision to close, at least for the summer, June through to September. And by meeting guest confidence and introducing adapting to the new health and safety regulation, there's a cost element there. And I guess this is critical when we are working with owners and operators to make these financial simulations and decide on whether we should continue to operate or shut down. These will play a key role. Cash flow is, cash is king, but cash flow is also extremely important as to how long that operation can sustain. What is the financial health of the holding? And that is where I see the bigger challenge. There will be a recovery, there's no doubt. And specifically, I'm an optimist, and I believe that we will eventually travel again. We love to travel, and the Middle East will see growth. And we have been seeing extreme commitment from the government to support growth in this region, and more recently, Saudi Arabia. It's going to be, however, a question of how long can we survive individually as hotels, but also all the other sectors that are related to the hospitality. So it is more of a survival question, and how long can we sustain operations before we won't be able to continue to be. For now, going more diving into the forecast and the assumptions that we have made around forecasting for the individual cities. We have in the past looked at least 52 cities in the Middle East, but for the purpose of this presentation and also with all the uncertainty out there, this is predominantly focused on 7 markets being the capitals of those cities. And I have brought up a slide here on our 2019 forecast versus the actual just before we start looking at 2020 and beyond. And specifically because at the time of releasing our valuation index in 2019, early 2019, actually in time of AHIC, back in April, we have projected performance for the market by year end of 2019 and accordingly the values. And we have gone into 2020 as with the, with what I would describe as a loud call for both for all parties, actually, including governments, to support that sector and ensure that there isn't oversupply, which is cannibalizing and putting pressure on performance, for also investors and developers to ensure the sustainability of these investments, but more importantly, also for the brands and operators to manage more efficiently. What we have observed over the last 5 years in the Middle East is that rates were declining, so was RevPAR, costs were increasing, and as a result, the GOPs were declining. And this was putting impact on value. And we were really hoping that they will come together, and specifically also for advisors to take on a key role and responsibility in actually being more realistic with the projections that we're putting out, rather than just allowing our optimism or emotions to govern the feasibility studies. And then comes 2020 and what I have called the COVID-19, the hefty guess, to actually call again on all these parties, being the government, but also the operators and the owners, to work together, as well as the consultants, in playing out realistic recovery scenarios in order to ensure that we are not underestimating the scale and magnitude of what this will have on our industry. So looking at 2019, we had forecasted the RevPAR for these individual cities. And as you can see from the slide, with the exception of Riyadh and Dubai, which I will comment on specifically, we were pretty much spot on, actually. But that's, again, I mean, obviously that comes into our experience in these markets, but also looking at seasonality trends, segmentation, reliance on international visitation, the efforts of the airlines, the government support of the sector. And it was, I wouldn't say easy, it's never easy to forecast, but I would say we probably had very strong reasons to be able to put this forecast together, and by year end to look back and actually realize that we were pretty much close. Riyadh in particular, they have achieved a higher RevPAR than what we had originally forecasted, but that's also on the back of the Vision 2030 and the additional support from the government, which resulted in additional room nights and also a higher rate. Dubai, on the other hand, however, the RevPAR declined when compared to our forecast, and that is largely related to additional competition from Dubai itself and other Emirates in the UAE, but also possibly from reduced corporate demand, as we saw pickup in corporate demand elsewhere in the Middle East region. So while there is a lot of uncertainty at the moment, and to look at how best to forecast 2020 and beyond, we have to recognize some of the realities of today, and not the least being the major airlines and the travel ban that is in place and continues to be in place. Last month, we were hoping that May, June, there will be a lifting of the travel ban. This is not looking so likely at the moment, and any announcements are predominantly for repatriation purposes rather than commercial travel. What we have also heard, and we're seeing that the government's pandemic healthcare bill is increasing, and that may also put pressure on the government's budget and future investment priorities, especially as it relates to driving forward these projects. Economic growth, whether in Saudi Arabia or elsewhere in the GCC, is also expected to slow down. And we have to recognize the fact that the large corporations have downsized, as sad as it is. people are losing their jobs, the spending budgets are being squeezed, and more importantly, it's all about the cash reserves and the cash flows, which to many already starting the 2020 and finishing 2019, many owners were not able to service their debt, which is becoming even more of a red as we speak today. And eventually, when we come out of it, there will be less disposable income and the consumer's purchasing power is reduced. So with a lower guest confidence and many of those events that would have triggered or induced growth in this region, the outlook for the remainder of 2020 would look naturally a decline across the different markets, but some of them will be able to manage perhaps better. And we will talk specifically about these individual markets in the next slides. So anywhere between a loss of 26% for Jeddah and RevPAR by year end up to 62% negative when we're looking specifically at the Manama market. So in terms of the regional RevPAR change, Manama will be the worst hit, and Jeddah will probably be the least hit, although 26% is quite significant. When we compare our forecast for the GCC and these 7 cities in particular to the globe, and these are forecasts from my counterparts across the world, the USA, Europe, and elsewhere, including India and Hong Kong, pretty much we share similar views, although these markets are drastically different, and somewhere such as the US or potentially China will benefit much more of a quicker recovery because of the domestic demand, which is not necessarily as relevant to the GCC region, but we are forecasting a negative 49% in RevPAR by year end for those cities in the Middle East. With the assumptions around how we're looking at recovery in 2021 and beyond, we take the view, and I would really hope to be wrong on this occasion, that it will take at least 4 years to recover, although we may be quite lucky with events such as Expo Dubai being rescheduled to next year, which should help Dubai, and the Qatar 2022, which will naturally also help the recovery in Qatar. But it will take time for the recovery to go back to anywhere, if at all, the 2019 levels. On the macro environment, there are assumptions relating to the economy overall, the oil and gas specifically, but also that the government will continue to support the sector and will continue to be able to monitor and contain the spread. More importantly, it is also a function of the COVID-19 vaccine or treatment being available, and that the travel ban will be lifted totally by October 2020, irrelevant if there will be international travel taking place straight away. Moving on specifically to look at the hotels, we know that many hotels have either been shut down temporarily or they have been converted into quarantine facilities. So there is an assumption that 65% of these hotels will be back and resume normal operations by the end of 2020. I don't foresee all the hotels coming back, and that's again for reasons that will relate specifically with their ability to generate the cash flow required to maintain operation. I would expect from those that have shut down or been converted that only 65% would at least come through by end of 2020. My guess as well is that projects that are under construction or about to start construction will be delayed, and that only 25% of the thousands of rooms that were expected in the different markets will actually come into these markets in 21 up to 23. And that eventually the brand and hotel managers will be successful in implementing new health and safety regulations. That will always boil down as well to whether owners are able and willing to meet the funding requirements. And I think more importantly, the question is, if the forecast is for recovery to start in 18 months' time, and if hotels are closed or considering to close down, aren't they better off closing down rather than making these adjustments? I mean, one of the arguments I have, and I've been thinking this through quite a lot, and I get asked this question often, if we're doing these temporary changes for the next 18 months only, but people eventually will go back to the way they travel and the way they behave pre-2020, then should we actually do that? Aren't we better off just closing down and coming back when things are normal? That investment has to be evaluated unless we are basically saying that guest behavior and preferences are going to change forever. And I don't think I'm in a position to make any conclusive comments about this, but this is something for us to evaluate and observe and learn along the way in order to be able to make those decisions. So just looking specifically at each market, Dubai between 2018 and up to 2020, there has been a decline in the RevPAR, and it is expected to decline further by the end of this year, specifically as it compares to the other markets in the GCC in the lead up and on the basis that Expo Dubai will take place as planned in October 2021. There will be pickup in demand before and during the event, which will help the recovery in 2021 and 2022. It may also mean that it will be a much slower Q4 2020 and Q1, Q2 2021, as most people will defer their travel plans to Dubai nearer to the Expo. From a source of visitation, Dubai predominantly attracts the international market and specifically Europe and Asian markets, and therefore very little reliance on domestic tourism other than the staycations. So we foresee that the majority of demand by Q4 of 2020 will be generated from the local market, and there won't be any international, very limited international travel into Dubai in 2020. Recovery in 2024, at the moment, this is too far stretched out, but it is anticipated to recover to 2019 levels. When we look at Abu Dhabi, it's slight growth in 2019 in the average rate in Abu Dhabi, and at the moment it is assumed that this will decline the RevPAR by approximately 44%. Pickup in demand in Abu Dhabi for the Q4 of 2020 is likely to be from local demand and also corporate demand that will be generated locally by the government and supported by the government. Naturally, Abu Dhabi will benefit also from spill-off demand and demand related to the Expo 2021 and 2022. Again, there is an assumption here that this event will take place and it will not be rescheduled until the following year, although I have been also hearing that there are suggestions being made for this to be moved out. Moving on to look at Jeddah. Jeddah is probably going to be the market that will perform best in Saudi Arabia, and that's because from a segmentation standpoint, it is a very balanced market in terms of attracting the corporate and the leisure segment. While MICE will not be so relevant in 2020 and early into 2021, my forecast around recovery in Jeddah will be predominantly driven by local domestic tourism and also potentially transit demand in and out of Mecca. When we compare the year-to-date performance also of Jeddah to other markets in the city, the loss has been lower. They are faring better in terms of the current RevPAR when we compare it to other cities that were very badly hit in the Middle East. And then recovery will take a couple of years, predominantly in the next 2 years from a local and domestic demand and also demand from the region. Generally speaking, demand into Saudi Arabia or hotel stays in Saudi Arabia specifically, 65% of it is generated from domestic tourism. So both Jeddah and Riyadh will naturally be able or less dependent on international travel and regional travel and should be able to capitalize domestic tourism ahead of other cities in the Middle East. Looking at Riyadh, it was one of those markets that have registered the strongest growth in RevPAR in 2019, as I mentioned earlier, and that came on the back of much higher occupancies, accommodated room night, but also an increase in the rate. because it is such a seasonal market, and because predominantly it is a corporate market, it is expected to be worse hit than Jeddah, and the recovery will also be slower than other markets in KSA. There is an assumption that the Vision 2030 will be supported, and that these projects that have been planned and that will potentially change the tourism offering and the market landscape in 2024 will allow for more leisure tourism in the next 2 to 3 years. That should also reduce the seasonality of the market. Doha market, in the sense that despite the expectation that there will be reduced performance in 2018-19, it seemed to have managed to diversify its source of business, and but it, however, remains a very much of a corporate segment, but with a large share of extended stay business, which supports the maintaining at least the minimum occupancy in 2020. 2022 should definitely support the recovery in the market. The bigger concern with the Doha market is, with all these hotels openings, what would the years post 2022 look like, and whether Doha will be able also to diversify its product offering to appeal to the leisure market, which at the moment does not constitute more than 10% of the overall hotel stays. More importantly, Doha is also very much reliant on the international travel market, and there's very little domestic tourism in the market.
Great. Hala, I've just jumped on screen as a very subtle and loving little time prompt.
Sure, and we've done, I mean, Muscat, there's nothing major there. It will take time for Muscat to recover, simply because there aren't any key events that will take place that will support a faster recovery in Muscat. And that should bring us, I'll conclude there. That should bring us.
Fabulous. Thank you. Thank you so much for that.
Anita.
And I must say, Hala, it's interesting that in this time of global confusion, it actually helps understanding what we don't understand. And so much of your content and your commentary was incredibly valuable from that perspective, because it gave us a sense of where do we need to point the compass in terms of understanding, and how long do we need to hold on for. Your point about 4 years was very valid. One would rather hear hold your breath for 4 years and then be told to release a little bit earlier than it's only going to be this long, and it continues and it continues. Yeah. So thank you for what you've shared and the generosity of sharing within that. We look forward to seeing you again, and I look forward to thanking you live as soon as our doors open once again.
Same here. And I'm just going to add, if anyone wants to have a follow-up discussion around any of what was presented, we will be at our booth in 15 minutes from now.
Fantastic. Thank you so much for that.
Have a good afternoon. Thank you.